The Federal Reserve cut interest rates for the second time this year. They're down another 1/4%. But what does that mean for things like your student loans, mortgage, and more? Money editor John Delano takes a look.
After the Federal Reserve raised interest rates 4 times in 2018, it has now cut those rates twice in 3 months.
They're cutting interest rates in response basically to lower inflation.
David Root, a certified financial planner, says a cut in interest rates usually boosts the stock market.
It tends to be stimulative for stocks and bonds. We saw almost an immediate reaction when the Fed came out.
Good news for those with IRAs, 401ks, and other stock market investments. The Dow Jones, which first broke 27,000 in July, is now back above that mark. But in general, says Root,
the interest rate cut itself really doesn't impact us as consumers. It's more for corporations to help them relieve borrowing costs in the short run.
Root says this rate cut will have negligible impact on student loan and auto interest rates unless more cuts come, something President Trump wants the Fed to do.
He would rather see the Fed be bold and lower rates by 50 basis points at a time so that we stay in balance with these other countries that have very low interest rates.
Still, for homeowners, lower rates may mean it's time to refinance a home mortgage.
It's worth considering, and the direction very definitely is for even lower rates. So if
you might wait.
I think it's worth waiting, but kind of have your finger on the trigger because it's going to be, I think it's going to be a choice opportunity once again to look at that.
John Delano, KDKA News.